Hello, welcome back to this week's market update. Today is Tuesday, January 21st, 2025, and with that, let's jump right in. Looking at last week's market performance, we reversed a lot of the negative momentum that the start of the year had. Markets found a lot of encouragement with falling yields and a lower than expected core CPI, which lifted sentiment and lifted the markets. You can see the Dow was up the most last week, up about 3.7%. The S&P following at about 2.9% return last week, with the Nasdaq Composite also up almost 2.5% last week as well. With the falling yields, we also saw bond prices rise slightly, with the Barclays Aggregate Bond Index up 1% as of close on Friday. Heading into our economic data from last week, we got both the Consumer Price Index as well as the Producer Price Index. We got some mixed results, some metrics rising in the month, some metrics falling. The most encouraging part of the December CPI was by far the slight fall in the core CPI, which came in at 3.2%, which is a little bit lower than expected. And then headline CPI came in at 2.9%, which was an increase from November's 2.7%. On a monthly basis, headline inflation was up 0.4%, while core inflation rose 0.2%. So that core number really encouraged investors last week. Breaking down the December CPI into categories here, you can see that headline number at 2.9 and that core number at 3.2 annual inflation. We had food at home up just shy of 2%, so groceries up just a little bit lower than 2% from a year ago. But you can see November and December showed pretty strong month-over-month increases in grocery prices. And a lot of this comes down to egg prices, which are up well over 30% from a year ago. So hopefully those go down and these categories here moderate with that as well. Eating out, that was up 3.6% from a year ago. Energy as a whole, pretty neutral from a year ago, with gasoline and fuel down a bit from a year ago, while things like electricity and gas service are up from a year ago. So about a net neutral, down slightly on a year-over-year basis there. Looking at the new and used vehicles, those continue to fall from a year ago, but were up in recent months. You can see here, those were up on a month-over-month basis. And then the most encouraging thing here, we had shelter inflation at the lowest level since January of 2022. So that remains pretty sticky at 4.6%. Although the fact that this is the lowest level since 2022 suggests some easing for sure. So overall, very mixed CPI print, but the market took it as a net positive. Moving along to the PPI, the Producer Price Index, aka wholesale inflation. This showed a little bit of a lighter than expected reading at 3.3% from a year ago on both the headline and core figures there. Things like transportation and warehousing were up 2.2% in the month. Energy up 3.5% in the month, so we saw that in the CPI as well. And that led goods overall to rise pretty sharply in the month, while services were pretty flat. So ultimately, this came down to an increase in transportation and warehousing costs and energy costs rising. And those are pretty volatile categories. So this 3.3% print here is not extremely concerning when we look at how it is made up within these categories. Moving along in our week, we also got retail sales data for the month of December. Sales totaled $729.2 billion, which is up 0.4% from the prior month. However, this was shy of the anticipated 0.7% monthly growth. On an annual basis, retail sales rose by 3.9%, reflecting steady but slower consumer spending in the holiday month. So still outpacing inflation on a year-over-year basis, but not growing at quite a fast pace as economists had maybe hoped. Looking by category, you can see auto was one of the leading categories of sales growth in the month, with subcategories like motor vehicle parts sales up 8.4% from a year ago. Other categories like online shopping, aka non-store retailers, was up 6% from a year ago. So some mixed data here, overall a little bit slower than expected, but still reflecting economic growth. We also got some mixed signals from the housing sector, with housing permit starts and completions being posted for the month of December here. all came in roughly around 1.5 million for the month. However, we did see this 15.8% increase in the amount of housing starts in the month. So that's a good sign that hopefully new supply should continue to expand. Although, when you look at the total amount of housing starts, 2024 was actually the lowest year in the last 5 years for total housing starts. So that's not a great sign when we're looking at a housing shortage. A lot of demand issues, as well as high interest rates, create a lot of softness in the residential real estate market. Last but not least, earnings season kicked off last week unofficially with large banks reporting earnings. We had JP Morgan, Bank of America, Citigroup, and Wells Fargo all report earnings. You can see all of them increased last week, some of them just about 3% on the week, while others like Citigroup beating expectations up 12% in the week. So overall, bank earnings are looking really good. Earnings season is off to a great start for Q4, and we'll continue to monitor earnings season for more updates. Thank you so much for tuning in to this week's market update, and we look forward to providing another update to you very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.